So the process, how does this actually come together? Because we don't have anything right now. We're not gonna say sign up here and we've got investments. We don't have that. How we work is we find an asset that meets our criteria. We look at it, analyze the deal, find the opportunity, being the rent bumps or the efficiencies, saving costs, and basically come up with an investment strategy of how this deal could make sense for us. Okay. We then, if we come to that point, we'll say, yep, we're willing to pay you, the price for the property, and we may or may not end up getting the property. If we get the property, we then go through the process of, getting under contract, all the rest, and we announce it to our investors. So we do not publicly solicit. We do not, most times, we don't publicly broadcast this. We work with arm's length investors. We have personal relationships with every one of our investors. You've got to be on our database, and we announce it and say, we've just found an asset. It could be in Texas or in Dallas. That's where I'm from. And we found this asset. It is 200 units. The opportunity is a $100 rent bump, or we'll give you some metrics of what the deal looks like at a high level. And start giving you a timeline of the process there forward. We then go on site with our management teams, contractors, roofers, plumbers, and we inspect those things like there's no tomorrow. We get cameras where cameras shouldn't go. We get on the roof. We get people in the files. We do lease audits just to verify that all the information we're receiving is true and accurate and again supports the business plan that we had. If we find anything that was perhaps not as expected, we see if we can modify the business plan or adjust the business plan. Most of the time, we actually found we put in too much capital improvement dollars. We think we're going to have to spend $500,000 to improve in a community. Once we go do our inspection, we say actually things aren't maybe that bad. We only need $400,000 to do the renovations that we need. While this is all going on, and once we finalize that, we engage our legal counsel who starts drafting up company agreements and SEC filings. So as we mentioned, every offering is a specific sole purpose entity. So we will form a newly formed entity just for the acquisition of that property. So at that point in time, do all the SEC filings and get everything specific for investors put together as well. Once, as I said, we've formalized all of that, the documents are ready, we will do a presentation. We put together probably it could be 20 to 30 page offering memorandum that will go through all the metrics. It will go through the underwriting, it shares accounts with you, shares the business plan with you, and just includes all the pertinent information about the market, about the rental comps, about just everything you should need to know about the investment. And we also host, usually it's a Zoom call, which is then recorded, and you can watch it at your leisure. Just walking through the investments, usually an hour, maybe two, depending on the size of the deal. And then thereafter, we engage with people directly. If you've got any questions, if you've got any more interest, if there's anything we didn't satisfy. And through that process, we find investors that would want to partner with us, because like Mike mentioned, we are investing as well. We invest our own money in these assets. This is not us placing your money. This is us, you partnering with us in these assets. So we go through that process, paperwork, finding our partners who want to get into the deal. We fund the entity, and then we close on the asset. So newly formed entity, everyone funds that, close on the asset. We use a third-party property management company, so professionals at what they do, and depending what market, it's a different partner. Property management is part of our business plan. They've agreed and understood our vision, our plans. They take over, they take ownership of that, and they start to increase the rents, do the, getting maintenance guys on site, doing all of that, while we're not on the ground daily, but we are on the ground weekly, making sure that everything is flowing The property managers are doing what we need them to do. They're executing the business plan like we needed to do, marketing plans, all of that. We manage the manager to make sure that it's staying on track and on course for the business plan. The typical timeline, just so you've got an idea of how these work, is when we send out that announcement that we've got a deal under contract and we're about to go do our due diligence, to actually closing on the deal could be as short as 60 days. So these investments typically, we like to keep people aware of what we're up to. We like to give you the general metrics of what our returns look like. So that way you're ready for when an investment comes or an opportunity comes through to say, yep, and it's really just for you to look at the asset itself and understand whether that is a good fit for you. But you do have to be fairly, there's 60 days to get money in the account and get into the deal. So it is a fairly quick timeline. And just, I guess, a little bit more color is typically investments a minimum of probably $50,000, depending on the project. It may be a $50,000 minimum. Perhaps higher. We've done a 35 minimum as well. Average investments are obviously quite a bit higher than that, but those are the types of numbers that you're probably going to have a reasonably short timeline access to, to be able to get the funds.